What's up, everybody? Good morning. Welcome to the stream. Yo, you all saw that? Hit that leaderboard in the Robin's Cup. Let's see if we can keep going today. Market's doing pre-market. Today we had CPI come out. CPI day had a quick little bump. Nasdaq hit the DD bands the top side, turn around, pull back down. So we're looking to see if might do some slight irrational. Sorry, not irrational. A slightly rational day. The catalyst is still active though. Likely, so we'll have to see. Take it a little bit easy. Be trading small today. Nothing too big. Obviously, you got that big swing off of that move. I don't like to trade big on days like this. Take it easy. Good morning. Good morning. We're rolling over to the M24 contract yesterday, so we've been trading a new one. DD bands are effectively 52.23.5 on S&P. We never tapped it yet, but Nasdaq we did. That's top 5. Oh, thank you. We'll see if I can keep going. What up, everybody? Good morning. Whew, getting situated here. All right, where's my pencil? Everything's all over the place. Hold on. For my tablet. Hey, what's up, y'all? Good morning. Howdy, howdy. I don't know what stuff is. I'm getting my flashlight out here on my phone. It's kind of dark in this room. Where'd everything go? My little tablet pencil thing. Oh, here it is. It just blends in with my my desk mat, which is pitch black. Everything here is black. That's my theme. It's my favorite color, I guess, as well. Let me see, my stuff is always darker. This, I can't even see this. It blended in with my desk. I'm like, wait, where is it? Good morning, everybody. All right, take a look what we got in the market today. Real quickie on Thinkorswim, pull up all 4 indices together. What's up? Okay. We know how this works today. We draw the overnights. Let me show you guys what I did last night. So remember, in our Discord every night I'm posting our overnight calculations. What we do here, I'll show you this. Overnight calculation expected to run inside of here because of CPI. Trading between the blue and orange lines. It's monthly and weekly hedge pressure, and as you see, in the overnight we traded between these lines. I said it was expected to stay inside of here, right? And we did, except for that small excursion during the London and I guess this would also be the Asian market close. We ramped up, and then looks like Germany or German market open. We traded back down. So the expected was where we were, and now we're back at the expected start. So just take note today when you go through these bands. The market, the predictable part of the market day is over. So everything here is just random going forward. Days like this always make me worried that it might try to trade lower. But remember, I don't take reversal steps just to bet on that. I'm still looking for a bull market, still very bullish. So I'm going to look for entry points. I'm going to look for resilience to help me out on this. But this, before we start, I'm going to go ahead and do a quick. Let's just see if there's an active catalyst here. We're going to do a trick called red line trick. Everybody, if it's your first time here, feel free to subscribe to the stream. Give us some love. Let's do this really quick and make sure we note this. This is the old impact from H anchor. Okay, so this is the IRL from the H anchor gone. Let's get rid of all of the oh no, that's the one we're playing around with. We're testing that one. Okay, so this is the one from H anchor as well. Okay. This is one we're testing from our video. Did you guys like that video yesterday? The multiple anchors. There's a purple line here. That's something we're working on. It's a new thing we're testing. New thing. You're gonna love it. Okay. So we're gonna leave this guy here for a moment. And I'm expecting the M contract to go to that purple line. That's where I'm expecting us to go. So I'm gonna do a really quick impact test to see if we have one. This is gonna be for today, and we do have one. I'm on a tick chart. It's a really cool trick. There's there. Easy peasy. All right. Just gonna measure that one line right there. We're gonna take it all the way back to the platform. So as you see, the run length is where we crash down or collapse down into. So we're good there. That's gone. Let's go ahead and mark this impact line here. Label it M24. This is just pre-market warm up. You guys are waiting for this to get going here. We have about 10 minutes so we get started. Thank you for tuning in, by the way. If you haven't subscribed to the stream, please do. We love you. IRL, always label these. We go M24 and we'll do CPI. All right, so I was off the CPI move today. Give me a high volume pivot going forward. And that is 51.85 and a quarter. Okay, that's all I need to know. That's it. That's the only line I need to know today. Hey Matt, should I be viewing the M24 contracts, or do you only do that the day it rolls over? So if you want a good guideline about rollover, you use the CME guideline. You literally go to equity index roll dates. I'll give you the link. Actually, here, let me show you. Use the CME guidelines if you're trading equity products. Go here. So I roll on these dates here. So for an example, the right here, the 3/15 expiration, which is this Friday, I roll on 3/11. This amber is the color of your energy. 3/11. Seriously, that roll on 3/11. So in June, the M contract, you'll roll on the 17th, and they'll tell you some dates, some guidelines there. Fun fact, that's also the date that Thinkorswim natively will roll you as well. Like if you're running the continuous contract on the top of your screen, like right here, so you have just ES, they also roll you, or they roll the continuous contract into that new front month on that date as well. And they put a little vertical green dash line right here for that for you. And then I'll give you that. Hopefully that helps you, Alexander. Well, I can't reach you guys. I put my glasses on. You guys remember how blind I am sometimes. Oh, it's, you know. Our MHP, HP. Oh, you're talking about Mahesh overnight dynamic calculations? The ones that we do for the indices, we don't have those for other commodity products just because they're manually done. We will one day when we automate it in the platform. The bot though is only for those 4 things I do, fortunately. So for the pre-market, no. If you guys came to the lifetime only thing yesterday, did y'all like what we went over? Those of you that are new and want to join our community and utilize our platform, this is what I use to trade, especially trading the Robin's Cup. extended trial. It's a $35 a month, very inexpensive to get access to the platform. All the tools inside the platform and our Discord community and all that comes with it. Feel free to check it out. OBP, yeah. So if you join that extended trial, as soon as you do, it's very inexpensive. There's like maybe a huge community and everybody trades like the same way here, learns this stuff. You'll connect your Discord to the trading platform. So we have our own trading platform that comes with the membership. We built it here. I'm actually the CEO of this company. And it's the Rocket Scooter platform. And what you can do is you connect your Discord to the platform itself, and then it will give you access to the Discord. So we have all kind of cool Discord roles and educational videos in there. Kind of reviewing the overnights again, if you guys are just tuning in. We use what our technique is here is we look in the options market and we look at the landscape of where risk is spread in the options world. We could take all the options that exist and we filter them by removing options that we don't believe or belong to a hedge trade. So essentially every option that exists, for instance, the S&P or whatever you're looking at, our algorithm looks for ones that it looks across all kind of markets to try to look for trades that are hedged, neutralized trades. We filter out those, and that's what reduces us down to what we call market maker options, market maker risk. So where dealers are trying to be risk-free, we're looking for risk-free trades. And so once we paint out that landscape, we calculate something called hedge pressure, monthly hedge pressure off of the monthlies, and we can actually find out the pure dealer level, dealer gamma and delta hedging pressures, if you may. So what it does is it produces a liquidity map on the screen, which literally shows arrows that show me the direction of the flow. We can predict order flow direction quite easily with that technique because dealers are forced to long and forced to buy when that balance is broken. So this is showing you the pressure of those. Hedge pressure is dealer gamma of options sold to market makers by options dealers, and walls are institutional positions in the same light that are trading against the house. So you'll see two things pop up, and that's all I trade with. I use no technical indicators. I guess you might want to call one of these maybe that's not really a technical indicator. It's a whole different thing. So I literally just trade off of these things right here, liquidity map. And if you guys are in our program, you'll get access to liquidity maps. We got today. Anything else going on today? Just pre-market here. The auction at 12 for 10 year. 10 years that's a big auction, so pay attention to that at noon. With the federal budget coming out an hour after that. Cumulative traders still show that the market is still somewhat liquid. You got the bull side increasing its positions, the bear side increasing its positions. When the green, I'm sorry, hold on, let me come here. Where's pre-market warm up? 4 minutes left. When the green and blue fan from each other like this, the market is liquid, and liquid markets do not crash. I'm not looking for this to turn around and fall out. So we're still seeing signs of liquidity until the green starts to sell off. You guys remember your monthly maps from yesterday. This is forecasting when the bull side and bear side start to change. The bull side kind of pointing up and the bear side pointing down is going to show a volatile market, and the monthly maps and how you read that. When you see them fan apart just like this, volatility is going to be increasing. So you're going to have a choppier atmosphere that we're in. So we're not going to play like trend days where it's going to run up and stay up. We're going to buy dips if we're bullish and short highs if we're bearish, right? So that's how we trade. Monthly maps tell me all that information. And this is all available to you guys if you are using Rocket Scooter. So I put the link in the chat above. You can check out our extended trial. Trust me, for 35 bucks every month for 3 months, you're going to learn more about the stock market than you have in a decade. You guys are here? You ready to go? Kevin has a good way to roll. He rolls when the volume of the future is the futures contract, the total volume of the day is higher. That's the rule of thumb that everybody has done since the beginning of time, and that's a great rule of thumb. So that was much more important back before like trading was computerized, when the pits were still open and futures weren't traded on the Globex. You would actually see the forward month being very illiquid, like hard to find good quotes on, and the bid ask would be really high. So that volume trick was a way for you to stay in the most liquid contract as a trader. These days with everything electronic, if you were trading H and trading M, and M had slightly higher volume and you were in H, You don't have to be panicked like, oh God, I'm in the illiquid contract, I'm in the wrong one. H will be liquid until the moment it expires. Just because there's so much trading now, in major products like equity index futures, you're not going to ever see it being illiquid. Now, in other types of futures, you may. Some, you know, commodity futures or spread futures, anything like that, may not have a high amount of liquidity. That rule of thumb definitely applies there. But as Kevin has said, that's the way most people do it. If you need a rule of thumb, just when it comes close to expiration of the option, I mean of the contract, make a watch list on a platform that has volume and just put them side by side and trade the one that has higher volume. And the reason you do that is to prevent slippage on the bid ask when you're trading. All right, 1 minute to go. Let's put the glasses on and get serious. Just take a note today that NASDAQ did tap DD band and pull back. We're gonna have a yellow light out the door as the NASDAQ has fulfilled its destiny. When that happens, we say the market day is random from there. We're gonna continue our series today of for our lifetime only webinar course. Yesterday, we talked about cascading red lines and contango midpoint. It was a very, very, very eye-opening webinar. It's something we've never talked about before in a course series. That was really fun. Our overnight dynamics, one of the things we do look at.
Meet Asana, a work management platform.
Oh, right. I love the ads come on my little videos here. Okay, resilience out the door, looking pretty solid. We are gapping up the open. I'm going to take a long at half gap if we dip to it really quick. I do want to do something. Let me let it pull though. Something like this is going to want to play. So let's aim for here. I hate when they have irrational already out, or sorry, when a DD band's already tapped out the door. You have to be very careful. I never jump in and chase for a move. I'm going to let this thing settle out a little bit. Let's see where VIX is and see if we can get any signs of a flag. Now I know the market's still likely wanting to go up. It's just I need to get a good setup on this. DD is really nice and strong. Okay, so we do have two really solid VIX pivots. Remember, any upside is going to have a limit when VIX hits monthly hedge pressure. So we will have some downside today, just on volatility alone. Okay, this is going to pull back. Let me let it pull back. If you guys are here, feel free to hit the like button on the stream. We love y'all to death. Give it a little love. Okay, so I want to trade from here to here. Let me make some room on the chart. I want to buy a dip at half gap as long as we're good. And and hedge pressure's right in front of us. Oh shoot. Okay. Actually, do I want to? Oh, this is such a hate. This is a crazy. Is this a short setup? What do you guys think? Resilience is good. Hedge pressure tapped to half gap. This is going to be tight. Okay, we have two competing signals here. This is the rare thing. Rare. We don't usually short off of this. You have resilience pointing up. Hedge pressure pointing down. This is going to be scalping in between here. Scalp. So up, down, like that. Let's hit the edges of that. So it's going to move up about 6 points. So maybe right about here, right about 13. It's actually might be worth a short scalp at 13. Okay, so let me show you something right here. That's supposed to be a 3. Hedge pressure is about 12.3, so it's about right here. I mean, half gap. Okay, let's see if I can hit it. I'm not gonna take it yet. I want to get at least 7 more points from here before I see it happen. Remember, the reason I'm looking for this to turn around, you guys know that, is we're gonna have VIX in here. This is the reason. Watch. Volatility, this is gonna be a VIX. HP bounce. Be patient on this one. So as we go up, that's going to go down. That's going to cause the dip. The volatility is going to expand very quick and go like this and fizzle out. It's kind of risky short to do, but there's 6 points, actually 8 points to the top. Resilience is good enough to take a small long to the top. But I do think we're going to do it. We're going to have a short off that. Let's check QQQs really quick. That's the only foreseeable trade, and we've already hit DD ban on Qs. So we'll be trading small as it is, right? QQQ is fighting for a lot of things. Illiquidity pockets appear as well. So QQQ is probably going to, again, Nasdaq's coming in that bearish setup here. I'm gonna be really picky because I don't want to get in and take 7-8 points of drawdown. I definitely want to scalp it from here to here. I'm going to play both sides of the range, whatever we get. So this is, unfortunately, is not going to be a big rally day today. So we can already see that, right? And VIX is actually at that. Oh, VIX is at that spot right now. You guys will notice one thing about my technique is I'm not trading every single day. I need to find, I like to take perfect setups. I have a really high win rate. I don't lose a lot of trades. I'm very picky. Even though, like I tell you the direction I think it's going to go and I draw it on the screen, you guys might like that. If you like that I do this before the move happens, with all the evidence we have, we use our liquidity maps to predict where order flow will be based on the options landscape. It's a whole different technique of trading. You guys can check out our extended trial to use the platform itself. Click this link below. You get access. It's the membership and subscription to the trading platform, actually. And you'll get full access to everything we do here, all the different tools. We have a huge Discord. You guys are welcome to check it out. So if you're new here, we love you. Thank you for tuning in. Who's here because y'all heard about us on the Robbins Cup? Throw a big, fat Robbins Cup in chat if you guys are here from Robbins. So you see how at the start of the day, I drew this, this, and this, this, and this, right? Just like that. This is the scalp I wanted to take. So I really wasn't getting the pivot I want, so I didn't take it. But so what we can do here is actually different than what most people can do with technical analysis. It's a very different style of trading. As you can see, you can rewind the stream. I literally drew on my stream what was going to happen very accurately. Now, again, it's trading. You're not always right, but I didn't get the exact pivot I wanted. I didn't like the drawdown, and we're kind of tight in a range. But as you see, it's pretty accurate, right? And this is what I'm using to trade just for Robbins Cup. I don't use any technical indicators. You guys might wonder how I do it. Hey, Annie, thank you so much. So what we're actually looking at, we're using options. So for example, trading S&P futures, I'm looking at the options in SPY to generate what's called a liquidity map. And liquidity map is going to show me where pressures are in the market just based on hedging. So delta hedging those options. So we're at half gap right now. Market's going to try to fill that gap and hit this red line. This is also a pivot right here. This will be a high volume pivot here. This red line will also be a high volume pivot. Yeah, that's what I'm wondering. Well, resilience is negative now, so it's going to be hard to predict this one. I want to see this touch exactly, but we didn't get that. So it's like if I don't get the exact pivot I want, I don't really take it. So if you want to see really quick on NASDAQ before I bring it up, NASDAQ is running back right down to this yellow line at 223. So 223 would be support on NASDAQ. So as soon as we close out this impact line right here, there's likely to be a bounce. I might take a little scalp on that. Resiliences are positive enough at the bottom of this box. So when S&P fills its gap right here, I'm probably going to try to take a long as well. So another auxiliary trade. Remember, I only like to trade the pivots I get. There's a test from here to here. So this is one that already took place. And that's a res greater than 0. Res less than 0. Let me go down here. So right here might be a tiny little bit of a scalp potential, but only now to about 10 points higher. So about 98. 2000 is resistance right here. So since we hit this red, I'm going to long it right back up to the middle. Remember, you see what I drew right here today? This is me forecasting the day. I'm very picky though, because I want to see that volatility there. We're kind of stuck in between two traps on VIX. VIX is going to have a very choppy day itself. Yeah, sometimes you don't get the pivots you want exactly. So I'm about to fire an entry just to kind of show you guys. I wanted to get the pivot I wanted. I want to get the pivot I wanted. So as we're trading off of an event, sometimes you're going to overshoot and miss your pivot. So I want to be very picky about the trade I get. And sometimes if I don't get it, I just don't take it. That's one of the tricks to actually trading. You guys know I actually maintain about an 80% win rate, 70, 80%. And that's people have been watching me for half a decade on YouTube. But it's because I'm very picky and I don't trade all the time. If you guys are struggling with win rate or struggling with technique and risk management, this is what we do here. My risk management's ultra tight. So that's how the trading contests like Robin's Cup and things like that, I don't trade all the time. I trade only when it matters and only when I get something I want to see. There's that. Actually, what I drew right here. We use a combination of 3 indicators here. We use something called DD. We use something called resilience, and we use something called liquidity map together. Liquidity map is the landscape of options where institutions are trading against dealers. Our algorithm can look at all the options and pull out what market maker options are by looking at zero risk trades. There's a way we do it. If you don't know who I am, by the way, my background is engineering. I'm a chemical engineer. If you look, I move my big ass head right here. You can see there's a engineering degree behind me on my head over here. Okay, there's that red line tap. There's that gap fill right here. Come on, there's that red line. Just one, something small. Something small. Probably undershoot the pivot, so something really small. My last attempt is going to be 5 points lower on here. 81. Trade bull zone tap. So let me show you the next step here. The 3 indicators we have, one of them is a gap fill predictor on the index. So this resilience number right here, when markets are rational, help me predict if the S&P is going to fill its gap or not. If that resilience number is greater than 0, this white number, we flux to the top of the box. If it's less than 0, we flux to the bottom under most rational conditions. So let me show you the and so if you're in our program or you subscribe to our platform, we give you these tools. So inside of this redistribution zone, which is like the distance between the gap on SPY, we use this as a kind of pivoting indicator to say if the S&P is going to fill its gap or not. If it's positive, it wants to go to the top of the box and interact with it. If it's negative, it wants to go to the bottom of the box, right? And so this is looking at the aggregate of all 500 stocks in the S&P. So right now, as you see, the S&P is fighting positive, negative. It's not giving me a good signal, unfortunately. Do I have a course where I teach? Yeah, we actually have a whole series of courses. We teach everything futures. My style of trading is all risk management based, and we definitely teach this. So if you go to our website, we have a whole series of courses on everything from entry rules, exit rules, risk management rules, trading futures, advanced concepts, things like that. It's a huge video series we teach. And if you guys have taken the videos here or watched the videos, do you guys have any feedback for Nico here? So again, taking a little scalp, I'm not like too excited about as resilience is negative. I kind of like hate the idea of it. I know I'm being a little pussy about it. I'll take 200 bucks and call it. I'm going to get out of this one really quick because resilience is now throttling below 0. That pressure's still down, but what I do want to take is a bull zone tap, our DD roll. So it's 200 buck profit real quick. Again, I don't like it just yet. Once I got in, I'm just going to better safe than sorry. The last of the 3 that we use is called DD ratio. And with DD ratio is another aggregate that looks at the index itself. If bull zone is where you have more bulls than bears trading against the house, trading some market makers, and we derive this from options. So if all of the stocks themselves are trading in bull zones, the index is also expected to stay in a bull zone. So this ratio, this one ratio at the top of the platform, you guys, like I said, it's if you check out the extended trial, you can get all these tools and play along. 35 bucks will give you all the indicators for a month, for 3 months, and it's usually 200. So you guys can have it for 3 months, canceled if you don't like it. You go through all the courses in the first 3 months and learn all the tools. This one little ratio right here, this guy right here, It's really strong. It's still a really strong bull market. This right here, we call it a bull zone, bottom, bull zone, bottom, this like bottom of this gray box is very likely to be support. So 511 support if DD is greater than half, and it's 0.8. So 80% of the market cap of the S&P is supporting a bull zone. So S&P is expected to at least hook right here. So there's another, I know I took a long here, but I don't like it because this indicator is now pointing down. So I might get the actual long right here to scoop it back up in a second trade. So a second dip. So we'll see if I get it. All the data in the courses and Discord data is very valuable in not losing money, just like what Matt is doing today. Yeah, not losing money is our goal here. The way to make money as a trader is to not lose money as a trader. It's very true. Very good adage. It's one of my favorite sayings. So I got in a trade. I scared myself out of it. I'm going to wait till the next pivot. I'm going to scoop up right at 511 when I get there. Yeah, we encourage everybody to at least check out at least one time. Go into the courses and tell me if you like what you see. Let's run monthly maps really quick one more time. Let's run the new ones. Oh, very nice. Okay, so everybody see monthly map has somewhat repaired itself. Bull zone sloping down, bear zone sloping down. Okay, so both of them are illiquid to the bull side. The bull's side market has preserved itself, which is good. In this particular read, bull side sloping down, bulls are longing more over the next 5 days. So this is predicting the future, by the way. This is how options are expiring over this point in time. It's going to show you where people are going to be longing or shorting this based on options. Bears exiting position, short squeeze. So again, the momentum is to the upside. It's repaired. And yesterday it was a little mucky, but here it's definitely repaired. So let's run QQQ really quick and see the same thing in NASDAQ. And QQQ, like I said, is trying to break monthly hedge pressure. This is very caution right here. Watch these hedge breaks. It might actually keep me from scooping this dip up. As I was watching these indicators, that's why I got on my trade earlier. There's your risk management you saw. Okay, QQQ is in the same boat, still bullish with the short squeeze. So I looked at that one really quick. So be careful here. Hedge break, bulls on bottom on Qs. Let's go. And very quick. And if you guys are just learning this process, there's that scoop up point right about here. Well, let's get an exhaustion candle. Let's look for it. Oh, dude, we went really far. This is my, okay. There we go. We're there. All right. Oh, that's the scary part. That's the bull zone and the liquidity pocket. Do we have an exhaustion candle? We definitely do. Okay. But we lost. We didn't get a pivot. Ooh, this is tough. Okay, let's take one. Where am I scalping it to? Resilience is dog shit right now. Absolute dog shit. The highest I would expect is a retracement bounce to 12.5, which is about 15 points. So the risk is about 1.5 to 1. I will lose $500 though if I'm wrong. I'm about 200 already for the day. So it's about it. And so we'll do risk to reward. On my trade on this, I'm looking to go to half gap if I do touch it, which is about 15 points. It puts us right about 51.96. So although I did forecast this first move, that one's already moved. Let's delete that. Let's go away, go away, go away, go away. This is just a small scalp if I get it half gap. Right here, bull zone. This is the DD rule. DD's 84, it's bullish enough. The probability is really, really low though. Irrational. So I shouldn't normally be trading or trading big when these lights are red. We have an excursion on NASDAQ. These are my risk management lights. When these are red, my indicators aren't going to work as well. So when they're green and yellow, everything's going to look nice and pretty. So when they're red, it's a little riskier. Market's going to be more random. So this bull zone, we need it to be a little fatter than 0.5. So 0.6 is my normal rule when these lights are red. 0.6 could be strong enough. I'm betting on this, so the probability is not as high that's going to happen. It's a low probability trade, but I'm going to give you guys some excitement today. It's a random market. We're random today. So basically all your indicators, you guys are going to realize it's going to be a coin flip. Market's going to move and pivot and jolt around because of this one thing right here. Once you fulfill these band taps in the morning, especially pre-market, the market's going to do weird stuff. This might even dip before it rips. It's not going to be a clean trade. So my little pivot right here is not going to be clean. I already know that going into it. So because of that, I'm trading small, very, very small. It doesn't look that good. So we'll see. Like I said, I'm on the edge. This being negative limits my trade to half gap. There's at maximum 15 points. The pivot will likely come inside of here as VIX itself starts to collapse. This volatility itself will likely collapse. So this is one of my keys to tell me that we're going to move, and we know the volatility collapsing the market will help my trade out. Hold on. Oops. Clean out some of this. So again, I'm only scalping with one mini today. I'm not really putting a lot of thought into it. Here, this is definitely going to pivot the market lower. This pivot is going to drive volatility. So the S&P volatility looks like this, right? The market's going to be wider, big wider swings. And when volatility dries up, it's smaller swings. So we're going to look for like collapsing of the range. Again, it's just scalp day today. Doesn't like it. If you guys are your first time here, feel free to hit the like button on the stream and subscribe. We're here every morning, trading live every morning. There's another 200 bucks. Like I said, I just take these little tiny scalps. I'm going to be a little wuss about it, I know. There's another 150. I'm just playing each pivot and just taking what I can get. And that's 3% on the account, by the way. And you guys saw those tiny two little moves here. That's roughly 3% of the account. Now, that's not a lot. You may not think that I got a lot, but if you know day trading, this is a really weird day. The signals look bad, we're irrational. I'm actually happy with 3% on day trades. And I feel like everything else would be over trading. But you see that I got both of these pivots. I know it doesn't seem like a lot, but I don't like what I see. And even though I might be right on that trade, I don't want to do a commit to trade on this because I feel like VIX still has room to go. This still has room to go. So I'm going to be very cautious on this one. So I'm thinking I'm going to sit out from here. I don't like what I see. So this is one of the more difficult days that we've seen, right, in a long time, you guys. And of course, when there's an event kind of rolling out, like a CPI, it's a very low probability. I don't know. It's this little, there's a little exhaustion candle right here. So again, that's scary looking. So when I see exhaustion candles in low probability environment, this just tells me the market can still push down. I don't want to be in that trade. Oh, but hey, 3%, what can I say? Not a good day today. I'm not liking it. Although that might have been a decent scalp to half gap. I don't know. I'm going to bail on it. Anytime VIX is hedging itself higher, volatility expands. This is what I drew right here. That's what's happening right there. Anytime VIX is collapsing, volatility will collapse. So we're still volatile possibility. And if VIX goes below 7 or UBX goes below 7, probably good. But other than that, are you getting candle data? We are, it's on the test server now. We gave you guys an extra month and we're gonna switch the data. We had to pivot because we had, so we're upgrading our candle data feeds and it's on the test server right now. I approved it last night. The last thing we have to do is website changes for entitlement. Like all the stuff that like tracks, but like reports, like who buys the data and stuff. That's what the exchange makes you do. I'm building out right now. Coming out soon. Did you guys have a fun weekend? By the way, I have a Discord here. If you haven't gone, I typed the link in chat. Everybody go there real quick. And if you haven't subscribed to the stream, please do. We love you. Give us a little bit of support. I'm a live streaming futures day trader. I'm the CEO of the Rocket Scooter Company. We created a trading platform. I'm trading in my own trading platform, the Robin's Cup. My Robin's Cup account is connected to here. If you're a futures trader, you can trade futures in our account. We're about to get equities brokers in here at some point this next quarter. One of our drives is to create more brokerage connections. So we're gonna get some of the majors in here like TD Interactive Brokers and others. But join our Discord and feel free to ask our team there if you join. If you have any questions, just ask for help session. We're gonna do webinar series for our lifetime members today. If you guys are wanting to get in on that, we're still, running those series. It's gonna start every single day. Send me a message if you're interested in that. Join that program. It's like extended classes and courses over brand new topics, like experimental ideas, if you may. Yeah, this is like completely designed for beginners. We have 3 major indicators that we use, and that's it. And they're not even like trend indicators. So let me show you what we do. We have our entry targets are, okay, let me start at the top. We use these irrational rules are just a series of lights, red, green, and yellow. Red means like stop or don't go. Yellow means caution. Green means go. When they're all green or yellow, market's gonna be very clean and market's gonna pivot really nice. Do you see really quick, Nico? You see how I drew this bull zone and said we're going to bounce because this ratio is greater than 6? These are all just rules that we use. And that trade right here, that is exactly the trade. Bull zone to half gap, bull zone to half gap. Exactly what I drew before it happened. Do you guys see that, Nico? There's no more complexity than this. It's a straight up rule-based style. And what we're actually exploiting is the arbitrage, which means like if the stocks are moving, the index is going to try to track it and they're going to tether together. We exploit that and we use options to paint a picture of like where those pivots can be. So if you guys remember today, the first thing I drew was that we'd go up and go down. Do you guys remember that? The second thing I drew is that we would hit this bull zone and go to half gap. And that was the trade I was going to take that I wussed out on. Today, the trading day is over, everybody. In my opinion, from here, close everything down. I'm about to as well. I'm done. Close out everything. I'm gonna click this X. I'm gonna close everything down. I'm done for the day. I'm gonna get off the stream in about 30 minutes. $3 per data is coming out probably next week. I know I keep saying that, but I just now approved it yesterday. So we're updating our data candles for $3 a month. You guys are gonna get 100% of the market volume. We're buying all the exchanges now. Louis out. Louis, you're an animal. Louis knows the trade. 80 was still pretty strong for the bull zone tap from here to here. From this point forward, it's going to be random and like a shit day. So we've got VIX to play with. We got a lot of junk, and I know I wussed out, but hey, it is what's worth. So these 3 things, I'll give you guys a quick tour actually. So you might have seen on the stream, I called out both pivots before they happen. Not only am I sitting there like, I'm not using any technical indicators that might blow your mind. Like where are his overlays? Where is his support and resistance lines? Where is his volume profile videos? I don't use any of that. Created something brand new. And we look at the options world, which shows you where people are actually positioned to look for information. That to me is more valuable than the history of price at candles. Candles are good, but if I know where everyone's positioned, because the options that people hold, right, force the sellers of those options to buy and sell the underlying stuff. So if I have like SPY calls and I'm holding on to them, whoever sold me those SPY calls has to long SPY as those calls become closer to the money and go into the money. That's what the Greeks tell you. And so to find out where people are forced to buy and sell is what we're doing to get positional data. To get directional data in the market. We're just looking at the positions. And so we give you a nice clean thing called a liquidity map. Let me show you what it looks like. The different combinations of where positions are and where dealers are positioned. We have this section in our Discord called cheat sheets. We have all kind of neat little infographics that show you each of the tools and how they work. Our dancing mascot will tell you that we're cooler than anyone else because we have amazing dance moves. Look at this guy. Okay, so at the top of the platform, you'll see a series of letter codes, B, S, and U. B, S, and U is here. You can see that what it's telling me is that there's pressure off the bottom of the bull zone. And that's exactly what we saw. Josh, kill it, buddy. Nice job. So it doesn't mean that it has to do that, but it means there is bullish order flow from this exact pivot because this area is being guarded because of where the options landscape is. Again, you guys can rewind the stream, especially if your first day here. I drew before both of these happened. I drew up and down, then I drew down and up, and I'm done for the day. So some of you may have longed right here, got your ass handed to you. Some of you might have shorted here, got your ass handed to you, right? My trades today, I scalped from here to here and close. I scalped from here to here and close. And I know I missed out on this 20-point run, but it's too rich for my blood. I don't always like to trade. I hate volatile days. I like to trade nice, cautious, easy, predictable days. I usually run about an 80% win rate, and people find that hard to believe, but people who've been here for 6 years can confirm. They watch every single day I trade. I don't lose a lot of days. In the Robin's Cup, I've lost one day on stream. And I almost recovered it after stream. Well, not one day on stream, sorry, one day in general. Even days I was down on stream, I end up getting it back by the end of the day. So I don't trade a lot. And when I do, I'm usually right because I wait for the opportunities to look good. And even though today I could have been very right with the big profit, the risk management didn't allow me to enter it and stay in it. So I stayed away. You have a toxic relationship with TA? Bro, we all do, man. So this is a layer you can add on top of TA that gives you some extra oomph. So TA just looks at like the history of candles, right? So we're looking at options to give you information on futures. It's a whole different way to look at it. So you can still use your existing TA when you get a signal to buy or sell, double check it with Confluence here. What does the positional data tell me? Because if SPY is going to pivot here, futures will also pivot there. Right? And that's kind of the trick. They pivot at the same time. So I'm watching SPY to bounce here and I'm trading futures there. And that moved very quick. You guys see that? And you may say, oh, I'm missing out on this. Let me get in on this. Like I'm missing out on anything. I'm at what, 53% in 2 weeks. It's not a terrible gain. And every single day is a puzzle to figure out this guy good trades. I don't like trading volatility. Inside of this range is a very weird setup to trade, and that's why it probably looked weird for all of you. This is very weird to V 30 points worth of move, right? It's weird. No rally today looks good, right? So that's kind of the question you have as a trader. It's, to me, in my opinion, it's unpredictable. It looks good, I agree, but it's not good enough for me to want to trade it. I like to sit out and watch on the sidelines. Just letting you know, I got 3% on my account just with those two candles, okay? I don't need the market to move 40, 50, 60 points to be top in the world on this leaderboard. I take what I know, and sometimes I'll get lucky and get this, and you'll see me bounce from 50 to 90% in a single day on that account. That's not the goal here for me, but you're right, it does look good, but it's not good enough to trade. Case in point, hedge pressure is going to be really solid resistance. This is a very hard resistance to break. When markets are rational, meaning all these lights are yellow and green, it is a 75% chance, this is a real statistic, that we do not break 514. 25% chance that we do. So it's a harder move. Doesn't mean, again, the probabilities are different. I don't usually bet on hedge breaks. So another rule is that when these lights are yellow and green, I'll give you guys some actual probabilities as well. There's a 96% chance in rational markets that you stay in the zone you opened in. These are real stats from our style. So that leads to the accuracy of my trading. That's why I can scalp with confidence at a bull zone every time. 96% chance the day closes above 511, as long as these lights aren't red. One of them's red, so the probability is a little less, but still greater than half. Just stopped out. Oh, good job, guys. Bull zone bounce, one of my favorite trades. I always take it if DD's strong, and I do. So DD ratio, indicator number 1 tells me the strength of the bull zone and the index. If this is greater than half, I'll buy here. It's 96% chance if these lights are green and yellow. If one of these lights are red, then this needs to be greater than 0.6, and we don't really know the probability of that because irrational, we don't care to know. It's random. So it's more like maybe slightly greater than 50% when one of the lights are red. So far so good. Green and yellow lights is a 96% chance that this stays where it is. It's really hard to break that. Liquidity map's going to point in a certain direction. We are trading inside of this range right here. This is going to be right at 512.5. That's going to be your pivot today. 512.5 is where it's going to return to right here. That's the stash line, the halfway point between blue and bull zone. So today, this is going to dip right to there. Just a second. You're hovering 512.5. This is your pivot today. And so from here, the reason I don't think it looks too good to trade, because the market's going to want to stick here. Be very careful today. BSUs are weird because it finds balance between the resistance, the 75% resistance pressure here, and this 96% support pressure there. They meet in the middle, which is 512.5. Just watch. You'll probably see a really nasty candle real quick. Just dip to it. Common. So like it does look good. The question is, if I were to buy, I'd want to take a stab here. And if this resilience number is greater than half, then it's a pretty decent scalp from here to take another stab from here to there. I'm going to wait for the dip though. Good questions. So the rally is going to be hard to say because the market is pushing towards this consolidating area right here in the middle. Indicator number 3 is a gap fill predictor. We use a similar process of aggregating the market cap and the index, the stocks in the index, and we look if the index is leading or lagging the market. Right now, the stock market itself, if this number is greater than 0, stocks are pushing through the box to the top side. The index is likely to follow, which it did. So those are the only 3 tools that we really use for entry, and then we use these lights over here to tell us the confidence in them. And I do the same thing every day. I don't use any indicators on my chart or anything anymore. I don't load my chart with a bunch of garbage. Dude, I went to Twitter and I like Googled Robin's Cup just to see like who's all talking about it. And dude, I see people's charts like look like this like all the time, dude. Like I'm walking in there and I see these people like yelling and screaming at each other about this Robin's Cup thing. Let's pick something cool. And I see like this, I don't know, it looks like a box of Crayola has exploded, and it's just like this nonsense. And there's like, there's emojis on the chart. You know, like the thing makes noise and hums and hisses, and there's like, I see people like this, like I'm like the best trader in the world. I'm in the world, and like, and I'm just like, how do people? I don't know. I just don't know. There's some weirdos out there talking about the Robin's Cup all day long, but they're not on leaderboards. So I don't know. Probably for a reason. I don't think emojis are helpful when you trade. All right, guys, we're gonna trade the white ghost alien pattern. Make sure you get in on it. Buy the dip. Ghost feed. What are some of these things? What is this? It's drawing random candles. I've never played with some of these features. This is TradingView native. Oh, I can actually just draw random candles. Yeah, TA is good for what it's good for. I saw somebody that literally had emojis on their chart, and it was all automated with emojis. I can't even. I can't. The emojis got me. The upside down wedgie pattern. Yeah, TA is absolutely valid. I use it with Rocket Scooter. Yeah, TA is definitely valid. But I will debate you if you tell me that the jack-o'-lantern pattern is helpful to you. At the end of the day, it's not. It's the idea is that I see people that like cram 50 things on their chart. I would say beyond like 1 or 2 indicators, there's too much going on. Price-based indicators are all the same thing. They use price and they throw some math and create another thing out of it. So 1 or 2 price-based indicators are okay. I swear, like I said, I went to Twitter, typed Robin's Cup, looked at some of the people who were like, I'm gonna enter, I'm gonna win, I'm the best trader in the world, and I looked at some of them and they were like, 600 indicators on their chart, emojis, a bunch of weird stuff, and I'm telling you, it's diminishing returns after like 2. A couple of them help. I agree with you. Music. But yeah, literally one dude had emojis on their chart, and I was just like, I nearly lost it. So a neat thing about technical indicators that use price, the ones that are the best are the ones that use volume. Volume profile, volume weighted average price, VWAP. Those are very good because volume is a key indicator that's very useful. Yeah. So you have to be very careful what you do. Some of the TA is really decent. Some of it is really weird. So anything that's like a shapes, the market has no shapes. Let's just be real with this. Like I said, anything that uses like shapes and angles is completely a scam. Market has no shapes or angles. Like if there's like triangles or diamonds, or I've seen all kind of stuff. These things, if you see charts that look like this, it's a scam. The market does not follow any patterns. And like I said, I had this open challenge on my YouTube account for the last 6 years. If somebody shows me a 3-year broker statement using what I call shape patterns, that's profitable, I will give them 50K. I will literally hand them money, and nobody's come up with it because the market doesn't move in shapes, and it's just something that people need to know. But I see a lot of stuff like Elliott waves and things like this, harmonics, things like that. If you use that, good luck. If you use it, you're not making money. Just know that I'm another person that's telling you it's a scam. So be careful. The market moves in shapes. It doesn't. There's no shape, pattern, angles, none of that stuff. Fibonacci number, also a scam. Fibonacci's completely useless as well. There's no pattern to market. So when we teach here that you have to go into the market understanding there are no patterns, and then how do you exploit what you can predict? If you believe there are patterns and you haven't become profitable yet, just let my voice echo in your head as to tell you why. The patterns don't repeat themselves. They don't. So you have to be very careful with TA, understanding what the limits are. The limit is it's not going to predict anything. It'll help you read price better and see overbought, oversold conditions or find support and resistance. For the most part, is the limits of what it can do. It can't predict direction. The probability of it is hard if you don't have conditions to go with it, like rational. So you have to be very careful. Yeah, and so Abra is correct. You have to have some kind of conditionals, which is the thing I just said. Using something like this is conditionals. So like I said, my probabilities require green and yellow conditions. These are all based on volatilities and extra weird conditions in the market. The probabilities are strong under certain conditions. TA has to be approached the same way. You have to have certain conditional risk management underneath, like it only works in this volatility, this yada, 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 and then yada work. Agree. So Abra's on the same page. Anything that looks at the stock market has to have conditions to go with it. There's nothing that works in all environments. And I see a lot of these like trading systems out there. Like they're like trading in the morning, trading at night, trading all times with the same system, up, down, short, long. And it just looks like junk. Because for me to say, yes, I have a long signal. Yes, I have a long signal, but I'm going to bail early because my conditions are wrong. Well, crap, I missed out on a good move. But the conditions are what told me to get out of the way. It wasn't just let me just gamble on the move. The probability was a 96% in my head, so I didn't take it. So you have to have that layer of risk management in your stuff. Bull zone at hedge pressure, amazing. Yeah, pretty good trade. But no, I was just making fun of the emojis. When I saw emojis on someone's chart, I nearly lost it. Girlfriend's family was like, she was trying to explain to them what the Robbins Cup was. And so we were like looking up Robbins Cup on Twitter, and then like she said, she's like, why do people like, is that really a thing? There's people drawing emojis on their chart. And I was like, yeah. And she goes, are they on the leaderboard? I'm like, they'll never be on the leaderboard. Even somebody that doesn't trade thinks that's really stupid. So anyways, even yeah, because we were looking up on Twitter what Robin's Cup traders are. Let me tell you, the people in the Robin's Cup, the people in the top 5 are fucking awesome traders. I am actually a little nervous. The people that are in the top 10 or in the top 5, they're actually really good. I don't know Ryan Lavelle. I don't know who that is, but Kelly Michael Wallace, really good. Been very consistent. I've been watching his numbers. Ivan Sherman won last year with almost like a 500% gain. Now he's again 4th place now. These people are consistent. They understand that the Robin's Cup has a really big hit on commissions. To actually make money in the Robin's Cup is hard because on a minis basis, you lose about 25% of your profits, all the commissions and fees. It's higher than any other broker. On a minis basis, you lose about 40%. Trades and Matt made a video about that. And it's really hard. So you have to be very picky on your trades because you're already overcoming a huge hurdle. You have to trade minis. You can't trade micros because that 40% will really kill you. You need to win almost all of your trades to overcome that. So even somebody like Matt was like positive, but because the commissions were so high, it's hard to climb when you're using a smaller account. It's almost impossible. So you got to understand that these people that I'm looking at on the boards, these folks in the top 10, top 5 or whatever, I've been watching their stats from day one, and their stats have been consistent. Like, he's been at 70, he was like at 100%, dropped down to 80, sitting at 90. These people aren't YOLOing to get on the boards. This guy's actually winning, this Nazri Khan guy is actually winning, I think, the quarterlies. These people are all very consistent, and they have very good dynamic risk management strategies. I can see from their stats they don't trade a lot. And they don't trade a lot, and they're consistently good. And when they do trade, they bump. So they're a lot like me. They're picky. They move slow. They don't chase every trade, and they're very consistent. And they've been on the leaderboards multiple times in multiple places. I'm actually nervous. Despite all the jokers yelling and screaming at each other on Twitter about the Robin's Cup, who will never be on the leaderboard, these guys are always on the leaderboard, and they're actually very talented traders. So I'm a little nervous, actually, because I know I'm competing against some really talented folks. So wish me luck. You guys are here for the journey. Fingers crossed. But yeah, good luck to all the competitors out there. These guys are actually very, very solid. At least the stats are. Now, the guys in first place jumped very quick. So I tell myself, did they just get lucky on a few bull runs, or do they actually have a really solid strategy? So we'll see if they stay there. But the other 3 have been consistent. And that's what a game like this is, consistency. Actually entered the contest a little cockier than I thought. I was like, you know what? It's going to be a bunch of jokers. It's going to be whatever. And then when I was watching the stats, I was like, oh, I didn't have to see their trades. I saw the stats and I go, oh yeah, these guys are good. It's going to be tough. So I'm excited to see. I like competition at the highest level though. So I want to compete against people that are really strong. Because I'm not afraid of losing. You guys have watched me trade for years. I don't care. So I want to compete against somebody really good because I want to hone my skills really good. I want to be at 120% of my skills. I want to be as good as I can be. So I'm glad that it's not just like you can goofball your way to the top and stay there. I've seen people jump to 80% then jump off the next day. That's goofball trading. And these people are consistent and good. So I'm glad to see that some of them can get 400, 500, 600% a year over the course of a year. And that's where I want to be. I want to be at that level of competing against them. So unfortunately, I did not take this move. The risk management isn't there for me. There's this resistance off of hedge pressure. Remember, this is also a scalp that happens. There's that push off of there. It's a really hard day to read. So do I take any stock in dark pool levels? I do if you knew them on time. By the time they're reported, they've already been acted upon. Dark pool levels are always dark pool. The whole point of a dark pool is to be sneaky so that somebody doesn't see it. Right, you go submit your order there, pay a fee. And over time, they leak that order back into the market slowly with a strategy. But they report that trade that you made to them, the over-the-counter trade, late. So by the time you make that trade, between then and the time it's reported, it's very likely that it's already been acted upon, or that when you get it like in your retail platform, the faster funds have got the information first because they have radio towers on top of their building down there on Wall Street. They get their data feed a fraction of a second faster than you do. So in my opinion, dark pool data is questionable on its actionability. It's amazing data. It tells you, okay, somebody's trying to sneak an order here. Well, what are they trying to do? Are they trying to get in, trying to get out? Usually with dark pools, it's hard to say. A lot of times if you're in a trade and you want to sneak out really quick, that's the whole point. And you don't know the motivation, whether it's like liquidation, like margin calls, or if they're just trying to trade on inside information. You never really know, but it is useful data. The problem is that by the time it comes in, you on the retail side might be a little late to the party. So it's to me, it's good, and it's kind of hit or miss at times. So, and that's just because by the time they report it, it's probably already been hedged, or it's already been neutralized or something, because they report it late. They don't have to report at the moment it happens. But if you were to get that information faster than other dark pool traders that are using that information, you have an advantage over them. So that's kind of the key. And I always feel like things like that on the retail side, it's hard to get the advantage. You're trying to get the advantage over other people. You may not have to have the advantage over Wall Street, but at least you have to be advantageous against other people, right? The whole point about trading is to be better than the people that are worse than you. I gotta go in 10 minutes. I have a meeting. Yeah, so as long as you get it faster than a lot of people, you can have an advantage over them. But I've never explored dark pool that much. This is just in theory talking. So I've never actually really played with it, just in theory, because I know how the system works. I don't know if other people have actionability around it. I remember like Black Box Stocks is really good at the dark pool stuff. And I remember Mel Stone, she's a really good friend, is really good at that. And so like Mel made a career out of dark pool stuff. And I say there's anybody to go learn from her. Over at Black Box. She's incredible. She's one of the best people I know in this industry, especially that style. And I always wanted to sit down and learn from her. I just never, like, just got too busy here, but she's like the dark pool queen. If you know Mel, go follow, give her a follow. I need to catch up with her sometime. Oh, is she still around? I'm sure she's still around. And she does the unusual order flows as well too. Yeah, here she is. All right. Yeah, so dark, you guys want some dark pool stuff? There you go. Give her a follow. And they use she uses the Black Box Stocks software for it. And she'll tell you they synergize very well with Rocket Scooter. So according to her, there's a good synergy between positional data and the unusual options flow data that comes from them. And so as a second layer of software, it would be cool to check it out if you want to check it out, Sam. Chad. All right, I gotta run. Got a meeting. You guys only made like 3% today, but tomorrow will be more exciting. Hopefully get a better trading day. I don't like trading days like this, especially when there's an event driving the market. But hey, Robin Scup, woo! 3% game. Not a lot, but it's a game. We'll see y'all later. Everybody, really quick. If you have not tried our platform out, $35 a month. That's it. Normally $200 for all the tools and indicators. For 3 months, you can try it for 3 months. Hang out for 3 months. Everybody, it's the cheapest. It's the cost of a sandwich. You can try out all our indicators, learn all these techniques. Risk management based, position based trading. Very different style. It's unique. No one does anything like this. It's a lot simpler to analyze markets when you have fewer things to use. I always found. So for me, it's a more elegant approach to trading. Let's see if it's for you. Give it a shot. I mean, trading is hard, but your analysis doesn't have to be. Click that link. It'll give you automatic access to the Discord. You can check out all of our courses. You'll learn everything you can about positional risk management and learn to maybe up your game a little bit. We're glad you joined us today. Thanks for coming and cheering me on for the Robin's Cup. Please come every day. We're streaming live every single morning. 9:15 Eastern. Love y'all.